For our last speaker, and after that we will do the panel discussion. Our next and last speaker, he is one of the co-founders of Stockholm Blockchain. He has worked intensely with Ivan Liljeqvist to produce an online course about blockchain that will be released in 2 days. Yeah, he have educated quite a lot of companies in the subject, and yeah, he has a background in computer science. So, a big welcome, Filip Martinsson.
Thank you very much, Max, for the kind introduction, and thank you for putting all of this together. It's been a great night, and I hope you have been enjoying this. I am very glad to be here, and I'm going to start off by telling you a little story. Oh yeah, we're going to open up keynotes, right? Can you help me do that, Max? Let's see if that works. All right, I'm going to start off by telling you a little story, as I said. And it's about my friend over here. And her name is Jesula, and she lives in Haiti. And Haiti is one of the poorest countries on earth. It is in the Caribbean, and it also happens to be one of the most corrupt countries on earth. And every Christmas, I send my friend Jesula a Christmas gift. And the contents, they can vary, but I always make sure to send her some money. And this, this is sort of difficult, because how do you send money to Haiti? Where Jesula lives, there are no banks. There are no Western Unions. So what I usually do, I send her cash, right? And I put cash in this box with the rest of the gifts, and I ship it. And I know that many Swedes, we love to complain about PostNord. PostNord sucks. It takes forever. The packages get stuck. No, there's no comparison. The Haitian postal services, I cannot recommend them. They're not very good. Most of the time, the package doesn't arrive at all. But if they do arrive, it takes about 2 or 3 months. And this, of course, makes me very frustrated, because I send this gift to someone who really needed it, and someone took it. That's what I assume, at least. I always assume the worst. That someone has opened up this package, seen that there was money in it, and taken the money. And since this was an important gift, this makes me very frustrated. And now, and I assume, most people in here know that we can do this differently. We can eliminate this middleman, right? And this is what makes me so passionate about the blockchain technology, and why I choose to work with this. Because we can eliminate this middleman, we can send money to each other, send value, do whatever we want without these third parties, and we can help people like Jesula with financial inclusion, for example. And one of the most popular use cases for this technology ties well into this story. And we've been talking about it a little bit tonight. This is Silicon Valley, right? Oops. Well, this is Silicon Valley. And I was actually there recently and visited a friend who used to live there and work there. And he told me that 45% of the world's venture capital is in Silicon Valley. And this is, of course, a huge reason to why there's so much innovation there. They have extreme amounts of venture capital that is not seen anywhere else in the world, in such a small area. But now there's, a new kid on the block. Block. I didn't even plan that one. And we've been talking about it here tonight. It's called ICOs, right? And Ivan already did some work explaining this to you, so I don't have to go into detail, but it's a new way of raising money for businesses, and mainly small businesses. And as Christopher also said, there are a lot of scams. So, but it is, in some use cases, there are valid ways of raising money this way. So you create your own cryptocurrency, you offer it to anyone that can be an investor, and they get a token or your cryptocurrency back, right? And this totally exploded in 2017. Ivan showed you a chart, right? And this is another chart, but it's the same phenomenon, where we saw up until, I don't know if you can see it, but up until July 2017, we had a huge growth, and we actually surpassed, as Ivan said, angel and seed VC funding for internet businesses, which is actually a fair comparison since all the ICO fundraising is done for internet businesses, pretty much. So I'm very excited to see the rest of this graph because there was a half a year missing from where we are now. But the big difference from venture capital is, of course, that this is not only happening in Silicon Valley. This is happening all across the world. ICOs take place everywhere. As long as there are a good idea and, entrepreneurs, and they have internet, everyone can make an ICO. And this is what's happening, which I love. And Max gave me a good introduction, but, and so as he said, one slide was missing. Oh, oops. Well, yeah, we sent some presentations back and forth. But anyway, my name is Filip Martinsson. I'm one of the co-founders to Stockholm Blockchain, and I don't have 30 years of experience within cryptography because I'm not 30 years old. But I do consider myself a blockchain and crypto enthusiast, and I really do love this technology. And I have a background in computer science. I have been working as a software developer. I've also had my own startup for a little while, which failed miserably. Wasn't a pretty story, so I'm not going to tell it. But anyway, I was asked today by Max to come and talk to you about a case where you can use blockchain in the financial sector, and sort of to describe it in a simple way so that you can see where this can be applied in the real world. And I chose to talk about trade finance, which may be, sort of not a very sexy part of the financial sector. But it is a big industry, and that's why I want to talk about it. And what it basically is, it is about conducting international trade. So we have, two participants in a trade arrangement, and one of the persons has a product, and imagine this being a multi-million-dollar product that is going to be shipped internationally. And Lisa here finds a buyer that has money, but none of them trust each other. So Lisa won't, of course, send this multi-million-dollar product because he doesn't trust Bob to make the payment. And Bob, of course, doesn't trust Lisa, so he's not going to pay her before actually seeing the product. So we have a dilemma, right? We have a problem of trust. And we've been talking about this tonight, and Christopher's been talking about it. This is a perfect solution for the blockchain, because with the blockchain, we don't have to trust each other. We don't have to trust the third party. But we're not really there yet. Today, it's done in this way, right? We put a financial institution like a bank, and keep in mind now, this is, of course, a very simplified scenario. There are many more players involved, and it's quite complex. But I think this is a fair representation of how it works. We put this institution in the middle in order to provide trust to these two people. So how this works is that the bank is actually guaranteeing Lisa her payment. And since Lisa trusts the institution, she's now willing to send the product out to Bob, and Bob, of course, will pay off the bank, because he knows that if he doesn't, the bank will come and get him. Right. But this is a business that is full of paperwork and inefficiencies, and it is also very expensive to have all of these third parties in the middle. So IBM is one of the companies that has started to develop a solution for this. And what it is a private blockchain where they record all of these events that is happening along this trade finance journey, all from actually delivering the product to the shipping agency or to the port authorities, to tracking the shipment across the globe until it arrives at Bob's place. And this, of course, reduces paperwork, it improves accountability from the different parties, but it doesn't solve the underlying problem of trust, right, that we talked about. But we know that we can solve this in a better way, especially after listening to all the speakers tonight. We do have something that's called a smart contract, which is a way of, programming money, pretty much, where we can run applications on the blockchain that we can program that are immutable, meaning that we can't change them. So instead of using the bank, we can in the future maybe use a smart contract. And that can be the new intermediary, where both of the participants here actually know the contents of the smart contract. They can see the code and they know that they can trust it. So how this would work is that Bob instead would send his money to the smart contract, which now can hold money, right? Because we can program it to hold and send, receive money. And there it's locked up. It's locked up in the middle, and none of them can just get it out. That's the whole point. But whenever Lisa decides to ship the product, then the smart contract will automatically release the money to Lisa. Of course, again, very simplified. There's a ton of figuring out here along the way. But this is the basic concept of removing middlemen, replacing it by the blockchain and smart contracts. And it is a huge business. Many people haven't heard about trade finance, but it definitely is a huge business. I think it represents, or trade finance is used in 90% of all international trade, and it is a $10 trillion market. So by doing this, we can find a solution that is cheaper to run for both parties. It's more transparent, because everyone can see the contents, and it's also more secure. Of course, we do have a long way to go. This is not a simple solution, but if there are, I assume, great programmers in here that are interested in this subject, try to solve this issue and you will become a billionaire for sure. I guarantee you. That being said, I want to thank you for listening, and I want to thank you for coming also. This has been a great event, I believe. And now I can take some questions if you have any. Thank you.
I see one problem there. If you have a company, you don't want your business contacts to be known for everyone. Do you know anything about private smart contracts that not everyone can know about?
I mean, of course you can. I mean, you don't necessarily have to reveal who's in the other end of it. You can use encryption and so on to mask who the sender and the receiver is. The smart contract itself is usually open source, because that's how both of the parties is going to trust it. But you don't necessarily need to reveal the identities of the two parties to anyone else.
Yeah, but you can still figure something out if it's a big company and a big sum, that it must be this one, and yeah.
Yeah, maybe. I think there's a lot of things, being done, and I think there's a lot of innovation in this space, where we see with, as you say, with many blockchain solutions, you can always trace back and see what has been happening. You can sort of put the, pieces in the puzzle together and figure it out. There are ways to, circumvent this and provide at least more anonymity, and I think that the people who's actually going to implement this is going to have to think long and hard towards, what these people actually want. And then public blockchains may not be for everything. I mean, IBM is working on a private blockchain, and then it can be disclosed, I guess, to, the participants. So there are different ways, I think, of solving that issue, but it's something that, of course, is an important issue for the traders, definitely.
We only have one today truly immutable blockchain, which is the Bitcoin blockchain. So then we have the Ethereum blockchain and then each of other blockchains. But all those smart contracts rely on the immutability of property. That's extremely important. How do you think that will evolve over time?
Yeah, that's very difficult to say. Obviously, we had this discussion in the car on our way here when we talked with Christopher, who is as he told you guys, a Bitcoin maximalist, and he believes that Bitcoin will be, the only major network. And there are ways of, you can build side chains and so on to Bitcoin, so you can use the Bitcoin blockchain and the immutability there to do these smart contracts and so on. And there are projects like Rootstock where you can do these types of things. But that's also something that will have to mature and see which path the market chooses to go.
I was asking about the Ethereum, not the Bitcoin.
Sorry. And the Ethereum, we have seen that Ethereum is not really immutable. As you pointed out, we have a very engaged founder in Ethereum, Vitalik, that has been engaged in rolling back some transactions and forking his blockchain and so on. So I don't know if Ethereum is going to be the platform to go. What we've seen so far is that it hasn't been very successful in keeping its immutability. So as of now, I wouldn't put any critical application on Ethereum.
Pay your kids anything. Don't put it on the blockchain. It's a new technology.
Yeah, so it's very experimental, and we'll see where this goes. But what's so exciting is the theory and philosophy behind it. That in theory we are able to do certain things that we weren't able to do before. Then I think the platforms are going to come. Anybody else?
I have a question about the decentral aspect. Consider that you talked about incentives. Right now, me or anyone else here would have an incentive to mine Bitcoin because there are big mining tools in China and everything where they have these ASICs. And doesn't that ruin the decentral aspect? If there are only these few mining tools to decide the fees and everything.
Yeah. Many people would argue that that Bitcoin is sort of decentralized, that it is delegated proof of work, that we all that use Bitcoin delegate that responsibility to some big mining farms. And that's something that, of course, can be an issue. And it's something that other people are scared of, and there are developing other solutions. But so far, proof of work has shown to be the most successful way of securing the network, and I think it still is. The point is that it is permissionless in that way that you can join the network if someone were to, if there were harmful nodes, we all could become nodes without asking anyone. Then the incentive structure is, of course, skewed. There is an economy of scale in this economy where if you have more money, you can, of course, achieve more power, and you also have, a scale where you can get even better hardware if you have a lot of money. But I mean, I still think today that it's the best solution, and I think that, once again, that once we see better solutions coming, we have delegated proof of stake, for example, coming in platforms like EOS, and we're going to have to see how those plays out. But as of today, it is still the most secure way of securing a network. Was that an answer, sort of?
Could I ask a follow-up?
Yeah.
What's your opinion on directed ASIC graphs, like IOTA and Railblock? Have you?
No, I can't say that I've studied those enough to give a good answer. So I think you have to ask someone else.
It's a very interesting technology, though, for the rest of you to have a look into it. It's not a blockchain; it's like another type of distributed network, and it's very interesting.
For you engineers here, you should look into it.
Distributed ledger, not distributed network.
Perfect. Any other questions, or should we move on?
Yeah, we can go on. If there.
Perfect. Thank you very much.
Thank you so much.